Ladies and gentlemen, please welcome our next panel, The Competitive Landscape, Prospects for Growth in 2006 and Beyond. Our moderator, Steve Ratner, Chairman, Willett Advisors, LLC, Jacqueline Hinman, Chairman and CEO, CH2M Hill, Joe Kaeser, President and CEO, Siemens AG, Jim McNerney, Chairman and CEO, Boeing, Penny Pritzker, Secretary, U.S. Department of Commerce.
Good morning, everyone. I'm Steve Ratner. I am the moderator for this really interesting panel. I think we're very fortunate to have an exceptional group of CEOs and government leaders here with us to talk about the international issues and the challenges and opportunities that business face. I'm going to dispense with introductions. I think you all have programs. If you want to know more about these panelists, take out your smartphones and Google them. You'll find out things that I would not say in a normal introduction. Everybody has a past and a present, but we're lucky to have them. So let me just plunge right in, and hopefully we'll be able to make this a discussion. I've encouraged the panelists to both keep their answers short and feel free to add and interject and whatever. But I think given the news regarding the Exim Bank, our host for this amazing conference, we should really start there and talk just for a few minutes about the role of the Exim Bank and how important it is for the Congress to reauthorize it. And let me start with Jim McNerney, who is very central to this, both in his activities and also as a customer. I think by some figures you represent as much as 80% of the Exim Bank's financings. Not quite. All right, but a fair amount. But from Boeing's point of view, I think I'll throw out another number I've read, which is that about 15% of your plane sales are financed using the Exim Bank. And some analysts have said, well, they could replace that. This is really not a big deal for Boeing. Some of the equity people who are supporting you believe that. And so how important is the Exim Bank to you and derivatively to the other customers of it?
Yeah, I mean, it's vitally important. And it's particularly important to our customers. If Exim goes away, what I refer to as unilateral disarmament by the United States, you'd be left with all of the competitors of American companies having some financial backstop for some subset of their customers from their Exim banks and none from the United States. So there is an obvious competitive disadvantage that makes no sense at all. We've got 1.5 million jobs that support our company through our supply chain and our own operations, and a lot of those jobs would be in jeopardy. I think there's another point that really is missed often in the debate, and it's a very practical one, which is, Exim is really a treaty amongst 60 developed countries, and the treaty is designed to provide running rules to control otherwise bad behavior, because every country has a different view of financial subsidization than others based on their cultures and based on their economies. And the Exim Treaty, in essence, that has been reshaped and shaped again over the years, levels that playing field to ensure that there's no misbehavior there, has dragged up the fees so that the cost of Exim backstops are actually higher than the kind of conventional financing that most of our customers can get. And that's the way backstop financing should be priced, quite frankly. And so if Exim goes away, you'd have the Wild West. You'd have certain countries whose governments do believe in subsidization, very much distorting the marketplace. Other cultures like our own, who don't believe in it so much, would be disadvantaged. And quite frankly, Exim goes away. I mean, I virtually, most of my engineering and manufacturing jobs are in the United States, and I'd like to keep it that way. But without Exim financing, you have to start asking the question on where you should be building things.
Just one quick follow-up, and then we'll move on. So why does Goldman Sachs think this is not a problem for you? That Exim going away is not a problem for you?
I'm not sure, but all I can tell you is that on the ground right now, our competitor is saying, hey, go with us because you cannot depend on Exim to backstop the financing in usually in the developing world is where this issue comes on. And that's a very effective sales strategy for our competitor right now. And so it's meaningful to our customers who need a bridge from purchasing an asset that costs billions of dollars when you buy a few of them from the initial order to in-place permanent financing. It's usually bridge, backstop financing, and it is very meaningful to a number of them. So Boeing can survive, for sure. Goldman's right there. But the competitive dislocation would be significant. The other guy would win some sales campaigns that they otherwise would lose.
Let me just move to your immediate right and ask Joe, as the CEO of a global company, well, Boeing is too, but really one that operates all over the world, but German headquarters. You have, I think, about 20% of your business in the U.S. You own Dresser-Rand, which I want to talk about later. But what is the relevance of the Ex-Im Bank to a company like yours that has some operations here but is fundamentally a European company?
I mean, honestly, and first of all, good morning, everyone.
Morning.
Morning. I mean, Ex-Im is just really important. And it creates jobs, it secures jobs, it attracts foreign investments to come to the United States as the place to be. And it also fosters exports from the United States all across the world. And in all due respect, when I heard about Ex-Im was in question, I thought, man, that's impossible. Why would they do that? So I really have to say, I mean, this is one of the most significant supporting matters, you know, to ease the business in the United States. And I just mentioned that at CERAWeek in Houston a couple of days ago. You know, the United States is the place to be. You really want to be in that place because it's the biggest economic power in the world. You know, the ease of doing business is great. We've been investing $25 billion in the last 10 years in the United States. The United States is our single biggest sales country. We have 60,000 people here, and it has a reason. It's not just the country is so beautiful, and people are great, and football is the greatest sport on earth, but it is about serious talks. It is about investing into resources. It is about export. It is about creating jobs. And that's why I really do believe it would be quite a mistake to let that go. Because the United States, after all, you know, is in competition with China, with some sort of Europe, whatever Europe is exactly all about. So I really do believe this is important. It should be done. And it does create jobs, not only at the big companies. You know, and I was very impressed when Fred Hunkberg was talking about the small Fritz pack. There are hundreds and thousands of Fritz packs supporting Boeing, supporting GE, supporting Siemens, and many others. And that's what really counts. And it's been often overlooked that for every million revenues we make here, you know, about $300,000 come from small and medium enterprises.
You know, Steve, that's just to jump in. I use a line, and it's true, which is every time a 777 lands in Beijing, it brings 8,000 small businesses to Beijing as an export that otherwise wouldn't be able to do it because they wouldn't be assembled as part of our airplane. And that's a big point. And
it is.
So I didn't mean to interrupt.
Okay, fair enough.
Yeah.
Jackie, you run a global service company, and so what is the relevance, if any, of the Ex-Im Bank to you? Do you actually use the Ex-Im Bank's financing in your business?
We are an engineering, construction, and operations company that works around the world. It's really critical to us, particularly around infrastructure. And I will say that we are seeing, certainly in almost every part of the world, and we work all through the world, a lot of the other banks really paying a lot of attention to supporting infrastructure, energy, in some cases, environment. So we're certainly incredibly supportive of it. We think it does help the American brand around the world, and we do see a strong importance of that. But I will also say that we also support manufacturing. Oil and gas and other things, and so as goes those jobs and that ability around the world, as goes the service sector of the United States.
So with all that said, Penny, maybe the question I'd like to ask you is, I know the administration has been pushing hard to get a reauthorization for a long period of time. What else can you guys do, if anything, to try to put the Ex-Im Bank on a more permanent footing?
Well, I think what we can do is do what we're doing here today, which is get out and talk to the folks who are customers of Ex-Im and make sure that if this is an important asset for them, as it is for the, our fellow panelists, that they are actually out telling that story to the appropriate people, because it's just ridiculous that we have a really important asset that we need, that 60 other countries in the world have. It's a ticket often for many of the customers here to just get into a bidding process, let alone winning or financing, et cetera. So it's extremely important that that story gets told, and that the story particularly is understood in every congressional district across the country, and understood not just for Boeing and not just for Siemens or for large companies, but how important it is to the small and medium-sized business.
Great. Why don't we turn to really that's almost the title of the panel, which are prospects for growth in 2016 and beyond. And we have 4 people here who are deeply involved in the international business community. Maybe give us a perspective on where you're seeing growth, what you're worrying about. Obviously, the U.S. is growing, but slowly. Europe seems to be off the ropes, but how far off and for how long? Be curious. China, as Penny and I were talking about before, there's a story every day about whether China is rising or falling or what's happening in China. India, some other emerging markets. So give us, if you would, a quick tour of the world in terms of where you see the most exciting business opportunities and growth. Why don't you start?
I think you pretty much summed it up, Steve. I mean, when you add that all up, what you just said, it's sort of a moderate to slow growth world. I mean, I see a more for less world out there in terms of our customers' expectations of us in virtually every market that I see. And so I think your basis of competition has to be both innovation and low cost. Those two can't be at war with one another. They have to be together. And so we spend a lot of time at Boeing just assuming a slow growth world, and therefore then what? And which doesn't mean the Middle East isn't growing faster because it is, or China isn't growing faster because it is. But I think a business strategy that isn't built on a more for less foundation is not one that'll be globally competitive. My take.
Joe?
Well, there's a lot happening in the world, obviously. I think by far the most attractive market overall is the United States. Absolutely, but if we go above and beyond that, China, I mean, they talk about the new normal with 7% GDP growth. Everyone is complaining about the slowdown in growth. Just may want to remember, everyone, 7% is more than twice or 2.5 times the global GDP. So after all, 7% is great, but China has become quite a competitive market. The only one way you make any business in China is that you are the best, and you bring some, also export financing and the likes. If you're not the best, they're just not going to listen anymore. So those days of easy sale is gone. The Middle East looks good. After all, Mexico, all the reform agenda which we see is absolutely fabulous. If you look at Egypt, same thing. Also India. We just happened to see Premier Modi at the Hanover Fair. And he's really up to modernizing his country. And it's 1.4, 1.5 billion people. And every economy basically starts with energy. Then comes infrastructure, then comes flying, mobility, moving people. So we really look forward to what happens in India. But on a more general terms, where we are looking for opportunities now are those countries and those economies which have quite a high bill on oil. Because that bill just happened to be cut back to 2/3 of what they usually had. So they free up billions and billions of dollars in their infrastructure and in their government budgets to spend for infrastructure and others. So that's where we are looking at.
So what countries in particular come to mind when you start to talk about the positive impact of falling oil prices?
India. India is by far the biggest oil bill as compared to GDP. So the president just told me when he was in Berlin, he said he probably has about a 60 billion ticket now he can spend on infrastructure rather than for importing oil. So that's quite a number to get started with.
Japan.
Then Japan, huge. Same thing on oil. They still pay a lot for gas, which is like $12, $13 US landed. That's quite a lot, which again calls for export and such. As I said, the Middle East countries.
So while we're mentioning Japan, do people feel that Japan is finally moving in the right direction? Or do you think it's still kind of in process in terms of the 3 arrows and the reforms?
There is a lot of effort they've been taking, but if we go by results at this time, which at some point you need to go look at, it's not really yet where they could be.
Too early to tell.
I think the jury is still out.
Yep.
Too early to tell, but it's been a couple of years. So
It's been out.
We have good customers in Japan, so it's too early to tell.
Yeah, so maybe it's a hung jury.
That's a polite way of saying not so much?
But then again, Japan, obviously, the more close the shop is, the harder it is, to be successful. So if you want to be successful in export, you've got to let the others in too. And that again speaks for global trade and working together and cooperate. And so maybe that's one of the areas they ought to look at.
They are.
Jackie, what do you
Steve,
say?
yeah, I'd like to challenge your thinking a little bit around falling oil prices.
Okay.
Or maybe not challenge it, but maybe add to the discussion. So I would say it depends on your time frame, right? So the next 6 months or a year are almost a blink to most businesses at this point. What we are seeing is that falling oil prices are as good for America as they are for everyone else, and that may be a little counterintuitive, but we are seeing incredible efficiencies that are now being driven, both to the majors as well as the minors. Certainly gas is cheap right now, that we have not seen in years. And I think we will see a much more competitive, efficient, better run, higher value oil and gas industry coming out of this within a year. Certainly cheap gas, et cetera, is really helping American manufacturing right now as well. But I do think that is actually going to help the majors around the world. We will see, I think, a difference in terms of value creation in the oil and gas industry as well. Certainly there are certain parts of the world, again, the Middle East, but we also see, for example, great opportunities in Latin America beyond Mexico, Southeast Asia, and some other places. But I did want to say, particularly around the oil and gas industry, we're seeing an incredible improvement in efficiency.
Well, let's come back to that because we have some investments in North Dakota and other places like that, and I'm not sure they're quite as ebullient, maybe perhaps is the right word, as you are. But Penny, you travel the world and obviously oversee a lot of this as Secretary of Commerce. How do you see global growth at the moment? Where are the strong parts? What do you worry about?
Well, I think this notion of slow global growth is absolutely, those are the facts, right? We can't dispute the facts. But where are the interesting places that things are going on? I think the interesting places are where the leadership in government is taking risk. So if you look at Mexico, the reforms that have been promulgated, changes in the Constitution required to address, the telecommunications industry, the oil and gas industry, those are huge political risks that were taken that are going to lead, this will be decades of change, but that's a very positive trajectory. India, what Prime Minister Modi is trying to do is really bold, and he seems to have the backing of his people, and they have a very small central government, so their biggest challenge is going to be to drive the kind of reform he would like to see throughout his bureaucracy. It'll be fascinating. We just created something called the Strategic and Commercial Dialogue. There's only one other country in the world that we have a relationship with where we're working, where the whole of government is coming together under a major dialogue, and that's China. And we just created this, and the Department of Commerce will lead the commercial side, the state leads the strategic side. And we'll see. But these are, I don't expect change overnight. These are hard-fought wins. It'll be interesting to see what happens in the election in Turkey. That's coming up, and whether that will be any change or not. The world is a lot of change going on right now. You've got, corruption in Brazil, the big scandal. That's a challenge for that economy, as well as their dependence on exports to China. China, we were just in China last week for an entire week on a clean energy trade mission, And China is not a market you can ignore. You know, I know 7% is the new normal, but 7% is still 7%. And it's a place that we'll continue to work with. It's a place that the United States has to continue to engage. So, you know, you listen to our leaders here, I mean, it sounds like their business is pretty good.
Is that a fair summary?
Yeah.
Business is pretty
Absolutely,
good.
it's a very fair summary. There is always, you know, there's always opportunity. And the bigger the crisis is, the more the opportunity arises.
I just want to make one other comment about oil. You know, while oil, as you said, you know, oil prices are a question for investments, let's say in South Dakota and other parts of the country. It has been, lower gas prices are putting, you know, it's been good for the consumer. That puts about $750 a household in the household's pocket. You know, there is a positive impact on GDP. It is good for manufacturing. You know, what does it mean long term? I don't know, but you know, there is a positive impact right now on our economy.
I agree with that. I was just really, I think if you're Japan and you're importing 100% of your oil, you have more of a positive impact than if you're importing 40% of your oil. That's all.
Fair enough.
But yes, it's definitely positive. So so everyone here agrees that their businesses are doing well enough, growth is reasonable, but there are some things I think to worry about, and one of the things that I worry about is U.S. competitiveness, and particularly the impact on the American worker of global competition. And I think everyone, certainly in this panel, maybe out there, knows that the average American worker hasn't done so well in the last 10 or 15 years. Average incomes are flat to down in real terms. Even during this economic recovery, manufacturing share of employment in this country has been going down. As Jim will well know, they're assembling citations in China now. They were assembling Learjets for a time in Mexico, things that we thought they could never do that would be our businesses. So I'd like to talk about the competitive landscape and how you see the future for America, really from the workers' point of view. What is the future of work in America in a globally competitive world, and how do you see us maximizing our chances of winning?
Well, this will sound a little trite, but the country driven by education, has to move up the value-added scale. I mean, Germany is not a bad model to look at. I mean, with 65% of its economy exported because of, in large part, value-added engineering and manufacturing. Boeing represents that kind of company. I mean, we're fortunate that we can pay our workers way above average, and we, by the measure of the relationship between imports and exports, we have the largest trade balance outbound of any industry in the U.S. And so the question becomes attacking the education issue and the visa issue, from my standpoint, getting more capability into the economy in those kinds of companies that create value added in not just manufacturing but services. But it's a lot of IT, it's a lot of engineering, it's a lot of STEM related things, and we've lost some momentum in my view, and there's all kinds of reasons for it. But it is a priority for the current administration, but I think it's got to become a bigger priority. So it starts with education and supporting the Ex-Im Bank. I mean, because most of the exports of this country are from value-added creators. They wouldn't be exports if they weren't globally competitive by definition. And so if you start chipping away at things like the Import-Export Bank, that's sort of death by 1,000 cuts. I mean, every globally competitive industry you've got has 10% less ability to compete, and that's a challenge.
I think we got the Ex-Im Bank point.
Thank you, Steve.
You know, Steve,
Fred is our host.
I understand.
Steve, I think there's three things that we need to be focused on. To build upon what Jim was saying, first, think about our skilled workforce. Our economy's changing. A third of our growth is from innovation. We need to have the workforce that is trained for the innovation jobs. And that is, 2/3 it's estimated by 2020, 2/3 of job openings will require post-secondary training. And so we need to, one, focus there. Two is trade. We need to execute on these trade agreements that are right now in Congress. Right up now, trade promotion legislation's up in front of Congress. We need to not only do that, we need to finish the Trans-Pacific Partnership and the trade agreement with Europe, because those are job creators and opportunities for American workers. Because there are through that creates opportunities for our companies. The status quo is not sufficient for American business. The third thing we need to do is invest in our infrastructure. We have, just like Ex-Im, we're now running the transportation bill down to the wire. And that's crazy. Those are really important jobs, and we have about $2 trillion of deferred investment that needs to occur. It's everything from bridges to broadband that helps continue to keep America competitive and keep American workers competitive.
Penny, I want to get to Joe and Jackie, but I just want to, since you raised trade, which I was going to raise later, let's come back to that. Let me come to that right now. So, as you know, most of the Democrats on Capitol Hill are not going to support fast track. We don't know exactly what they'll do on TPP itself, but they're against fast track. They're very concerned. The president, on the other hand, spoke a couple nights ago on MSNBC, and he said that the trade agreement was not only good for America as a whole, but it was good for middle-class workers. So tell us, if you would, how it's good for middle-class workers.
Because these trade agreements have something that has never existed before in our trade agreements, which is there are labor standards. If you're another country, there are 12 countries that will be part of the Trans-Pacific Partnership. All of the countries will agree that they will have a minimum wage, that they will have all different kinds of work safety in workplace, no forced labor or child labor, standards that we live by. So the American worker today is in an uncompetitive situation because we have a different standard than the rest of the world. The fact that we can create standards with 40% of the world's GDP just with the Trans-Pacific Partnership alone that have a new set of standards for the world is really important for the competitiveness of the American worker. Plus, it's good for humanity. I mean, it's good that we're not going to, basically move manufacturing to a place where you can take advantage of a lesser standard in terms of labor. The same is true for intellectual property protections. The same is true for how we deal with the digital economy. There are 150 objectives that Congress has laid out in the trade promotion legislation that are minimum standards that a trade agreement would have to have. So there's never been any this is really new in terms of what we're demanding in our trade agreements. And we have 11 countries just in the Trans-Pacific Partnership that want to do this.
So why do they want to do this? In other words, they're agreeing to all these things that, there's two sides of the coin. If this improves our competitiveness, it makes our workers on a more level playing field, why do these other countries want to give up these advantages they have?
Because at the end of the day, they recognize it's not sustainable. And they can use these standards for their own internal political dialogue about we need to change. We need to become part of a globalized economy. And I think it's prescient. They recognize where the world is going and that otherwise it's going to be a race to the bottom. And they do not want to be part of a race to the bottom.
Jackie, how would the TPP or the Transatlantic Trade Agreement help your business?
That's a great question. Let me build on what Penny was saying. In addition to things like worker welfare standards, TPP also has components around environmental regulation. It has components around transparency. I can tell you that certainly as an American CEO, we pay an awful lot of attention around the globe, and it's one of the reasons that American businesses are so competitive, not just on the quality of our services, but also around good corporate citizenship. So ethics, safety of workers anywhere, of our workers elsewhere and our workers here, environmental regulation, transparency, making sure we adhere to Foreign Corrupt Practices Act, those kinds of things. So from that perspective, it actually makes it easier for us to do business, to both follow standards that we have to comply with within the U.S., but also things we care about as an organization. I think it will also really attract more people to want to do that kind of business. Frankly, all of the countries that are involved in TPP are countries and organizations that we like to do business with. We think there's a lot of opportunity, again, particularly in our space, infrastructure, energy, manufacturing, environment. But there have been some challenges about doing business in those countries, and we think this would really help quite a bit.
Joe, I'd like to ask you about the trade agreements, and then I'd like to go back to something that Jim referred to earlier about Germany. But do you want to start with the trade agreements in terms of how it affects your company?
Well, I mean, first of all, let me come back to the original question about the United States going forward and what it takes to, keep it successful. From our global look, and Siemens it's not a German company. We're born in Germany, we are raised in Europe, but we are home in the whole world. We do business in 212 countries in the world, 212. And people say only the FIFA and the Catholic Church are in more countries than we are. So what I'm trying to say with that, that we really have a global view of what's going on in the world. And the only one thing I can tell you, you here in this room, and anywhere in this country, if you get only 60% right of what the potential is of this country, we're going to be, stay the most powerful economic force in the world. So why is that? It is. So why is that? It is because the United States has a very, very powerful energy policy. The United States cost for electricity and energy is just about one-third of what we pay in Europe. 1/3, okay? Not 30% less, but 1/3 of what we pay in Europe. And it all starts with energy. It all starts with electrification, okay? And you've got that here right in your country. And you've got the natural resources. Then what else is it? Through that resource, the American people, and especially the middle class, they can become more wealthy, as they are already. And what do you think what happens then? People who can afford something, they not only like for example, German cars, the BMWs, and the Mercedes, and the Audis, and of course the Fords and the GMs and everything else. They only don't like it, but they can afford it again. So where do you think those manufacturing places are being built? In Munich, or Stuttgart, or Wolfsburg? No, they are going to build here in this country, because people want to move here and make a benefit. This is how jobs are being created, and this is how industrialization, reindustrialization happens. This is not about companies bringing back its manufacturing from Mexico or China. Forget about it, because you need to be where the markets are and your customers are. But we need to attract people here through the energy policy, infrastructure policy, and that's how it happens. And then what else? You've got industry, and that comes the point. You've got industry, and then you have already the world's most powerful software companies, the world's most powerful media companies. Now, what is the Internet of Things, Industry 4.0, all about? It's about industry and software together under one roof. And that's how competitiveness evolves. And that's your country. And there's no such country in the world which can do that. And that's why this is so powerful. And then export happens. And this is the net of creating jobs. Export is the net of creating jobs. Input, versus output. And that's why you need a competitive and powerful financing systems to mitigate the risk of those countries.
I think I should resign and he should become Commerce Secretary.
No, seriously, I really mean it. And I didn't,
That's good.
This is a fact.
And now I'm about to become a little bit of a Scrooge and push back on a couple of things you said, because I agree with a lot of it, but I think there was sort of one gap in the middle that isn't quite filled yet. I mean, the energy boom is real here, and it has brought all the advantages, low costs that you said. What hasn't happened yet is an improvement in the state of the middle class, that if you look at wages that workers are making here after inflation, they just have not gone up. And we can talk about different specifics, but that's just a fact. So they're not yet in a position to buy those BMWs. And the second thing I would say, just to push back a little bit, is that for every BMW plant that's being made in South Carolina, there's 1 or 2 that are being made in Mexico, because it's cheaper in Mexico and it's part of NAFTA, and you can bring those cars into the U.S. And so if you look at employment in the auto industry, it's growing much faster in Mexico than it is in the U.S.
I'm not so sure whether this is all about cost. It is much more about markets and the availability of people who are trained well to deal with automation and digitalization. And that's where the training matter comes into place. It's almost like this, this movie on this Field of Dreams, you know that, right? Build it and they will come. You folks have built the infrastructure on energy already. There's got to be more on infrastructure, on flying and riding trains and this and that, move people and goods. But then also, we need to get prepared for the next level of industrialization and automation. That's then about training and re-education. So this is not something which you go out and report about the next quarter. That's not how it works. This is almost a generation, and this is what really this country and the administration needs to get started and look into the vocational training. Train people at site. Train your own people so that they stay in the company. And this is then where, this makes the difference. It doesn't get like quarter by quarter, but it needs to evolve. But all the prerequisites are here already.
But if you go to the German example, I think there are 2 points to make. One, energy costs in Germany are huge, in part because of some regulatory decisions you made to close down the nuclear plants and to insist on a certain percentage of energy coming from renewable sources.
Yeah.
So I'd be curious if you thought that was a good idea. And then secondly, as great a job as Germany does as an exporter and in training the workers and all the things you've been talking about, German workers have done even worse than American workers in terms of wage increases over the last 10 years.
Well, first of all, on the topic of the German workers, they have more jobs being created in the last 10 years than in the 25 years before. So the question is, have they been doing better or not, or is it better for an economy to create more jobs? It's better to create more jobs because this is also about stabilizing a society. Stabilizing a society is about jobs. And the second topic is, if you look at the productivity, versus what they earned versus what the inflation was, they made a pretty good living, okay? So they have increased their wealth overall. So secondly, the German energy agenda, it's called the Energiewende, changing course. I personally do believe that it is right to look for a civilized society like we are, United States, Germany, others. I think it's worthwhile looking into the question, should we have an energy source? Should we have a source of energy which, takes 23,000 years, to have access to the waste again without any danger? Do we have the right, to have 230 generations after us, to leave them with a waste which we don't know how to deal with? It is a question. It's a morale question. This is not about this residual risk of a super-GAU or a meltdown. This is not what it is. It is about the question, should we have 250 generations after us be left with nuclear waste with nowhere to go? And that's a question. So from the thought point, I think the government was right to look into this. The way they did it was just the way that I would describe it, like, if you want to look into an energy agenda and change your energy agenda as a country, you need to go to Germany, study the German energy agenda very deeply, very thoughtfully, and then you do exactly the opposite. And you'll be perfectly fine. So that's a fact. We created 50,000 jobs in China for the photovoltaics industry with the subsidies of German taxpayers. And that's just not right. There's nothing against, multinational companies, but if you subsidize something, they better pay and create the jobs in the country which subsidizes the jobs. That's a fact.
Let me turn finally, because I think we're almost out of time, and maybe this will help wrap a lot of this conversation together, to U.S. exports. And Jim, you're head of the Export Council, I believe. The President set a goal of doubling our exports over 5 years. I think we only achieved about half of that. Curious to know your reasons why we fell short, and without hopefully repeating everything we've all said, were there any other ways that you think we should be promoting our exports and getting to that goal of doubling them?
Well, I think it was a bold goal, closer to half than a third, but well short of where we wanted. But nonetheless, growth in exports have explained about 40% of the economy's growth in the last 5 years. So it's played a big role in the recovery of the United States. If we had doubled it, the country would be at 4% versus 2.3%. And we all want that, but nonetheless, I think we laid a very good foundation. The trade agreements that Penny has talked about in depth, and the only thing I'd add to Penny's comment is usually these agreements are about U.S. markets are already open to these trading partners, and this is a matter of opening up their markets. That's generally the theme, and so it's a matter of creating an equilibrium. That's the theme of both TPP and the transatlantic. I think the focus on education, the Export Council has spent a lot of time focused on education. XM, I won't talk anymore about XM, but a whole visa reform, just a host of infrastructure investment, services opening, just a whole host of things that I think are going to serve us well. And exports are the fastest growing part of our economy, so we got to keep pushing, even though we fell a little bit short of the, what is it, badass, audacious goal, or whatever, bad goal, or whatever. Yeah.
But the headwind that we have been feeling, do you think it is mostly the dollar, mostly weak economies in other parts of the world, more protectionist kinds of activities, either
I think, yeah,
officially or unofficially that go on? What do you think has kept us from
I think the dollar has played a role in the last 6 to 9 months, has played a significant role. Certain kinds of companies that, as we see every day on earnings reports, struggling top line, that would kick about another 10% into the equation that you talked about, Steve. I think slower recovery in Europe has played a role. I think we'd all hoped that Europe would come back a little bit faster. I think our model, when we set up that goal, assumed a little faster recovery in Europe. And quite frankly, it assumed sustainment of slightly higher growth rates in China. So you're back to this moderate growth environment, playing a bit of a role on the export.
Okay. Penny, what's your outlook for exports?
Well, I think that, some of the factors that have been discussed are absolutely accurate, but let's not overlook something really important. By setting the goal, you begin to change the attitude of American business. And for American business to continue to grow and for the American worker to not just survive but thrive, we need to export more. We have cities in this country, whether it's Detroit or Youngstown or Kansas City, where 100% of their growth since 2009 has been through exports. So we have to change our DNA. We have to change our thinking. Part of that responsibility belongs to American business. Part of it, the U.S. at the Department of Commerce. We facilitate that through the U.S. Export Assistance Centers. We have 109 of them or 8 of them around the country, and then our Foreign Commercial Service in country that help companies sell their goods and services around the world. We have to think about it differently. Remember, if you think about markets, what's going on in the world today? Asia is going to go from 500 million consumers to over 3 billion in the next 15 years. To put that in perspective, that's 9 times the growth, 9 times the U.S. population. Our companies need to be in those markets, small, medium-sized businesses as well as our large multinationals, in order to grow, in order for our workers to thrive. So it's, I think, really important that we think about, this in a very, that we're committed to thinking about exports. And I commend the President's Export Council. It was before my time when they worked with the President to set down the goal, because while it's audacious and while we didn't achieve it, we are changing the way we think and changing the way businesses think in this country. Steve?
Yes.
If I can add one other thing, I would not underestimate the value of American services, and particularly all that comes with it, innovation. Again, certainly, ethical standards, hard work, all these things happen in a lot of places, adherence to good corporate citizenship. We have never seen as strong of a demand as we are seeing now on that. So I do think that will add to that.
And to, just to put that in perspective, we had record surplus in services trade at totaling $232 billion. So services are a huge growth opportunity.
So on that very optimistic and hopeful note, we will conclude the panel and thank our guests for really very interesting and helpful, insightful comments.
Thank you.
And thank you all very much.